Time now for the markets with Leighton. And Leighton, you say the EPA proposal to reduce the use of corn ethanol has the grain sector's attention.
It certainly does, and the question is, how much could this move increase corn stockpiles in the United States? Also coming up in our segment in the markets, the wheat sector trying to find more demand for that grain. U.S. poultry exports continue to grow, and pondbank catfish prices in the United States are still rising. Some analysts say the Environmental Protection Agency's proposal to reduce the amount of corn ethanol being blended with gasoline is certainly bad timing for the grain markets. Trader Jamie Kohaki is among many analysts who believe the U.S. corn crop is getting bigger, and he thinks using less of it to make ethanol now will only increase the stockpiles and potentially drop the price.
I think the timing of it was terrible. We got obviously a large crop, large carryout, and we do it on a year like this, where I think if they wanted to adjust it, we could have done it last year, the year before, when we didn't have a crop, a shorter crop, and supplies were tighter, but it is what it is. The corn market looks very, very weak to me still. I would be selling rallies here up against this week's highs. And I'll also be looking out into the December 14 crop and getting hedged up out in there, up around 490 if somehow we could get a rally up in there. But same here as kind of wheat. There's just not a lot of fresh news. The crop seems to be getting bigger. I look for the December crop report to be bearish as well, more than this month's. And I look for the market kind of hover in the low fours. I think $4 does hold right now if demand stays where it is currently.
Corn is not the only grain where large supplies are a problem these days. Global stocks of wheat are also big. Analyst Don Roos says the search is on for more demand.
We do have just huge global supplies. So you're in a supply bear market. We did get a relief rally, gave us some support. We pushed up to some real resistance areas, but now we're pushing back down, trying to find some demand. India's joined the mix and trying to sell some of their wheat XX supplies. Who would have thought? So that's really the tell of the tape for the wheat market.
Foreign demand for U.S. poultry is not a problem right now. Data released by the Foreign Agricultural Service and Poultry and Egg Export Council show that exports in this sector are running at a record pace. Analysts note that poultry exports are growing marginally in both quantity and value compared to only a year ago. Our trivia quiz this week concerns maple syrup. Here's the quiz question. What country produces 80% of our world's supply of maple syrup? Is it Canada, or the United States, or Denmark, or France? I'll tell you at the end of the markets. Farmweek continues with a check of the latest snapshot of the U.S. farm-raised catfish industry. These numbers reflect what was happening during the month of October. Let's look at the data. The pondbank price, the price farmers received, was $1.10 per pound for premium-sized live fish. That's an increase of 30 cents per pound from 1 year ago. Farm sales topped 26 million pounds round weight, a decrease of 8% from a year ago. Processor sales total 13.5 million pounds in October. That's a drop of almost 2% from October 2012. Ahead of the Friday, November 22nd USDA cattle on feed report, analysts were saying they expected a big jump in placements, along with a smaller increase in marketings. Extension Ag economist Brian Williams discussed the beef sector with me Tuesday this week. Brian, up until this week, we've had some nice solid activity, we might say, in fat cattle, but you're saying we may be seeing a little bit of a change here in the market this week?
Yeah, this month has been fairly strong in the cattle markets, but the last couple days we've seen them come down a little bit. It seems like there's some inconsistencies in the cash market, plus we're bumping up under the holiday season and trade's kind of slowing down a little bit.
But supplies are definitely still tight. That factor has not changed.
Definitely, supplies are tight, and they seem like they're just getting tighter and tighter as time goes on.
Would you expect any kind of rally in that sector, between now and end of the year?
I think for the next month or so, with the holidays and the trade being slow, and demand for poultry products such as turkey being a little bit higher at this time of the year, I think we'll see prices remain fairly steady, but I do see some potential for them to pick up again after the holidays.
So we may say, in short, market stays supported as far as the fat cattle. All right, on the feeder side, we're still seeing some record highs there. What are you seeing for feeder cattle?
Yeah, the interesting thing is we've been talking about this for quite a while now. When is cattle expansion going to be coming? And what we're seeing right now is we're seeing more heifer retention now than we have in quite some time. So that's tightening the feeder supplies even more, with producers holding those heifers on farm.
But right now we are in this situation again, tightest supplies since what, the 1950s?
Yes, very tight supplies.
All right, how do producers, as far as their marketing and planning, how do they react where we are in this market right now?
Well, it's as I say, the markets I think are going to remain fairly steady through Christmas. I think we'll see them pick up into this next spring. Corn prices are down with the harvest coming in and just about finished up, a record corn harvest. So I think that things are still looking good for the cattle markets, and just keep an eye on the markets.
Before our new feature story, let's check that trivia answer for this week. And the correct choice is A, Canada. The other 20% comes from the United States. Maple syrup is, by the way, an entirely North American product.